Hello and welcome to Pro Trader Strategies Market Commentary for Friday, June the 6th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation for a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's talk about some economic data across the pond. We got German industrial production month over month coming in at 2.6%, expected to be 0.3%. They did revise last month's number down from 1% or negative 1% to negative 1.3%. So not much of a revision there, but a nice big beat on industrial production coming out of Germany. And then let's come back over here to the United States, and we got our average hourly earnings came in at 0.2%, expected to be 0.3%. A lot of people are talking about how as we approach this maximum employment area, that wages will have to start going up as employers have to start paying up for better workers as the workforce starts thinning out just a little bit, or the available workers, I should say. Unemployment rate did uptick from 3.8% went up from 3.8% to 4%, so it increased there, but we did see the employment change hiring increase, so it went up to 213,000 hires, expected to be 195,000 hires in the revised last month's number, up from 220 some odd thousand to 244,000. So nice revision there. We're seeing a lot of hires going on, but then you see that unemployment rate uptick. You wonder why. If we're starting to hire more and more people, shouldn't that unemployment rate actually go down? Not necessarily, because during Obama, one of the things that nobody ever really talked about was the discouraged workers. And discouraged workers, what they do is they go on, they get their unemployment, they're a part of the unemployment system, and they are part of that rate. Now, when they run out of unemployment or they become discouraged from looking for a new job, they fall off the unemployment rate because they are no longer unemployed if they aren't looking, or at least accepting unemployment insurance. So that being said, we're starting to see some of those discouraged workers see the economy picking up, seeing people get hired, therefore they are entering back into this workforce arena, whether or not they're unemployed or they are actually getting hired. So keep that in mind. These numbers could be a little bit wanky. One of the things the previous administration never talked about was the discouraged workers. That's something I always try to bring up as well. All right. And finally, we got natural gas storages coming out here pretty soon. I haven't gotten them yet, but they should be later on today. All right. Actually, I should have gotten those. I don't know why it's not showing up on my chart. Let me just double check to make sure. Natural gas storages came in at 78 billion cubic feet, expect to be 76 billion cubic feet. So a slight build there, probably due to the summertime weather. We're going to see some less than stellar numbers coming out of natural gas, I'm sure, especially with the heat across the United States. All right. On to crude oil futures. They're moving a little bit higher today after yesterday's big sell-off, that $75 a barrel area. One thing somebody was saying was that Iraq was going to stop producing oil. I find that really hard to believe. They're going to maybe say that they are going to stop, but that isn't going to be enough supply to drive this to $120 a barrel. That's what some people are saying. I don't think that's the case, especially with the United States producing as much oil now as OPEC. Sorry. One thing I forgot to mention was crude oil inventories yesterday increased 1.2 million barrels, expected to be a drawdown of 4.4 million barrels. That was a major part of the slide yesterday. Good economic today to giving that a little bit of buoyancy. So sorry about forgetting to mention that yesterday. On to gold futures. They're moving off today. You know, after yesterday's last couple of days rally, I think we're going to see a little bit of profit taking. I talked about this with the dollar increasing. That was kind of like the go-to for a while there on a flight to safety with what was going on in China with the tariffs, devaluating their currency, and today, gold just not getting a whole lot of follow through. We got Bitcoin futures in positive territory. We came down and tested this 58.80 is what I was thinking it was going to be, and pierced that for a moment. Next day jumped up. Still not seeing a lot of volume in this sector right now. It just seems like Bitcoin is just kind of fumbling along right now. Bonds looking like they're actually making a bit of a top here. I talked about this. They don't have a whole lot of room to move to the upside yesterday with the FOMC not really changing any of their rhetoric. That doesn't give bonds any room to the upside, so I'm glad I got on my TLT trade, which I talked about yesterday in the daily market commentary, so that looking for a downside move. I actually was talking to a couple of guys yesterday in the webinar about the broken wing butterfly, and this actually probably will work out very well for something like TLT or even the bonds here. So check that out. Go to protraderstrategies.com. I might be adding one of those here in a little bit on that. VIX coming off as the broader markets in the equities are moving higher. We got the Dow Jones Industrial Average up almost 150 points right now. They are, Dow Jones aside, but Dow Jones is approaching this point of control and the 23 Fibonacci extension level. That is going to act as resistance, and we got the 50-day moving average right there. So all of this little area right here is going to be an area where we really start to slow down on any momentum as far as I can see. We got the NASDAQ moving up against this Fibonacci extension, which is the 50, and the original Fibonacci that I had laid out from the previous year. So it came up and tested this. That being said, that is a major resistance area when I have two Fibonacci lines lined up right there together. That's going to be a moat to cross, not even a line in the sand. Now we got the mini S&Ps piercing above their 61 Fibonacci level. Not a whole lot of resistance in sight until we get to 76 Fibonacci level, which is going to coincide with about 2,800. So 2803 is what it's looking like there. So 2,800 is going to be the next area of resistance for the E-mini S&Ps going forward. This is the market action off of the economic data we got. We had overnight inventory getting long that got flushed out heading into the morning, and then once we got the economic data, it was all out. Rip your face off rally. As you can see, this is a 30-minute chart. Not even a red candle in there. That was just not even taking a breather on this big rally with the E-mini S&Ps up 24 points on the day. All right, on to a couple of things that I've done. The only thing I've done so far today, I'm going to be looking at putting on that butterfly for TLT. I already have some downside in there, but with today's market action, it looks like it's getting a little toppy. I'm going to add a little bit more to that most likely. So with Procter & Gamble, though, I pulled the ripcord on this. I may go back in there with the way that the market's looking today. But yesterday, with that rally, as soon as we started piercing above, I realized it did not look like it was going to come back anytime soon. So I pulled out of that one. And I had on the July 77.5 calls. I was short. I originally collected 45 cents for them, bought them back for $1.90 in both my IRA and in my margin account. Now, over in my IRA, I remember I have defined risk in that, and I have on the July where I am long the 85 calls still. So covered those 77.5 calls, but in my IRA, left on that defined risk because there's no reason to take that off. With that being said, I don't really think that we are going to get up to that 85 level in the next 14 days unless something really crazy comes out like they cure cancer or something. It's the only thing that might make them rally in that short period of time. That's about it for today. Check out yesterday's webinar on the broken wing butterfly, eliminating all risk to the downside, increasing your probabilities of success. So check that out. Go to protraderstrategies.com. That's all I got for you guys today. Other than, if you can't take that, take it easy.